Please share your thoughts on managing bigger capital, how we need to approach market when we are handling bigger amounts. Simple. My idea is very simple. The bigger your capital, the lower risk you take. The lower risk you take, the lesser will be the stress. Okay, so your capital is big, your risk goes down. That takes down your stress and anxiety. And these two, when low risk and low stress is combined together, that leads to some fantastic opportunities. Now, people don't have patience for this. They believe that if their capital has increased, so should their profits. Let's say you have X amount of capital and you are making returns like this. Suddenly, there is a big jump in your capital. Earlier, you were trading from this base, now your base is this. It has increased because you have added some capital. You cannot straight away start making these kinds of profits. You have to first go sideways, consolidate a little, understand what has happened, understand the fact that you are now dealing with more capital and the risks are also greater. You are not ready for the absolute number of the losses, the quantum of the losses, because if your capital increases 10 times, your loss and profit also will increase 10 times. So if you are making 1000 rupees loss earlier and you are okay with it, suddenly you will start making 10,000 rupee loss. If you are making 10,000, you start making 1 lakh. You need to understand that the absolute numbers will become bigger and bigger. For that to sink in, you need to have some time in between. So whenever your capital increases, you start with lowering your risk. How do you do that? Simple. What is the other side of the equation of the risk? Risk gets you opportunities. Opportunities, if you get and if you exploit them well, then they will get you profits. We are targeting profits. Our target is 0.5 to 1%. The moment your capital increases dramatically, you drop it. You make it 0.25 to 0.5%. This is well to 25% annually. This is no joke. The most successful, the biggest financial institutions in our country are not giving you returns more than this, promising you returns more than this. Those who are investing in markets, they are not giving you anything. It's market that is giving you returns. You reduce this, you trade for a while with these reduced profit targets. That will automatically reduce your risk. That will automatically reduce your stress. That will help you capture good opportunities, and that will result in more profits. And as your confidence grows, then slowly you can come back to 0.5 to 1%, and you won't suffer a big setback. Small setbacks, and then you'll just keep climbing. So that is the way you should handle big, capital. Strategies remain same, nothing changes. If you want income, obviously you go for credit spreads. If you want to make capital gains, then you can buy options, or you can use debit spreads or ratio spreads for that matter to make quick money.